Welcome to Pocket Watchers. I'm your host, Treetop Chris. On this show, we talk about nurturing your wealth and cultivating your future through financial education. Let's talk finance, people. Peace, family. It's your boy, Treetop Chris. Checking in on this Wednesday at 6 p.m. It was a very, very beautiful day here in Baltimore. We're taking a break from all of the politics that are overwhelming us, but they're all based on finance. I want to put that out there and make that very clear. At the end of the day, we're talking about money, and that's what this show is all about. So hello, and welcome everyone who is joining me online, TikTok. We are live. If you want to find me on YouTube and TikTok, you can find me at Treetop Chris, on Instagram at treetopchris_. Again, hello and good evening. A few things we want to talk about today, one of them being recurring payments. But again, before we get into it, I just want everyone to be very clear. This is a show about money. So with everything else that goes on during the day, for the people that tune in and listen to me, I know you want to talk about it. I know it's in the back of your mind, but it's the dollar bills, y'all. Welcome again. But again, recurring payments, everyone. I wanted to speak to this because this came up during this past week. I talked to several people and they had a question around paying your bills annually or monthly. Before we get to it, I just want to ask, how many of you have those recurring payments like Netflix and Hulu and ESPN Plus and all these different payments that you have coming out of your funds every month, right? In your budget, when you set up your budget, do you have an allotted amount of money for those payments? If you do, it's understandable, but can we pay those in a way that affects us less every month? Because if we have every single subscription every month, a lot of people want to get rid of those subscriptions. There's apps out there that can get rid of some of those subscriptions like Rocket Money and things of that nature that will actually give you a notification to let you know, like, hey, you're still paying this. Do you use it? We need stuff like that for checks and balances because, in order to start certain programs, you have to start spending money on that program. And I know that gets annoying, but you use apps like that to kind of remind you like, hey, I haven't watched Disney Plus in the last 3 months. Can I turn it off? Because it's costing me. I don't care if it's $10. I'm a financial advisor, y'all. If it's 50 cents, I want my money back. I want it. It's mine. If I'm not using it, I want to make sure that I'm getting it and putting it in my pocket and it's going to other things like investments and savings, retirement funds and things of that nature. So again, how many of these payments do you have? Are they consistent every month? They send you the little notification to let you know, like, hey, do you want to pay annually or monthly? What would be the benefits of either or? I would say monthly, of course, you don't have to worry about it if you have the funds, but they always give you a discount if you do annually. What's so good about paying annually for anything? Well, I'll give you an example. Car insurance, right? Everybody has car insurance that's driving a vehicle. And I want you to know paying annually or every 6 months will be a lot better. And why is that? Because if you have all these recurring payments coming out every single month, you can look forward to spending $200 or $300 on top of your insurance. Might be $500 depending on what your insurance is every single month. Now, what would life be like if you didn't have to pay $200 to $300 every single month? Well, that's what annual payments are for, people. Let's think about it. Just go ahead and make a payment. If you can afford to pay annually or 6 months at a time, why not do it? Just to save yourself that big bill of all these subscriptions, because it's convenience, it's leisure, it's entertainment. It's what we want to do when we're relaxing. We want to have those things. If you're on a flight, you're in the shower, you're in the bathroom, you're watching Hulu or whatever you're watching, Xfinity, whatever you're watching. You want to make sure that those things are paid and they're not hurting you in a way that if I have to make an emergency payment and then I have all of these subscriptions coming out every month, I still have to make that emergency payment. So why not just pay it over a year or 6 months, y'all? I'm just putting it out there. Just putting it out there so you can think about it. You don't have to do it. We talk about politics 100,000% of the time here on this station, but let's just take a step back and focus on the money. And I'm focusing on saving the money, putting the money back in your pocket. I know you're still spending it, but how you're spending it gives you more peace of mind. And that's what I do for my clients. And in the space, I'm just trying to give you all a peace of mind so you can relax and still be able to live your life without having these payments come out. Now, it is cheaper to do annual. It is cheaper to do every 6 months, just for the simple fact that you don't lose your funds every month, and more so because it's more convenient. It's more convenient. Just think about it. I wanted to put that in your mind. Okay, who's this on TikTok? Hey, it's Treetop Chris. Thank you for joining us. Again, all of these shows last week I actually spoke to putting them on YouTube, so they're being uploaded weekly. So you can go back and listen to any type of gems that I share with you all. And that Rocket Money app is another gem that I just wanted to make sure that you had. Rocket Money. It keeps track of all of your subscriptions and things, so you can kind of get a hand on everything so you can continue to move forward. Okay. Now, we're talking about paying payments. So I want to get into something else that someone asked me about, and that's school loans. That's a payment, right? How many of you have school loans? I know some people are a lot older. They've gotten out of the treacherous school loan forever payment with the forbearances, where you put it off to the side and hopefully they don't call you back, but they always do. They want their money. Now, some people hate them. Some people are like, hey, I went to school. I'm going to pay my school loans back. Not a big deal. But someone specifically asked me, said, Chris, should I pay my school loans off? I only have a little bit of money left or amount owed to pay. I said, well, how's your credit profile look? Why is that very important? Because if you have a school loan, let's take a step back and see what a school loan is. It's an installment loan. On my page and in my talks with everyone, I always talk about the difference between revolving debt and installment loans. I always talk about how to build a perfect credit profile. I talk about why installment loans are good, but revolving debt is a lot better. If you follow me, you know the difference. I'm not going to get too much into it, but hey, I think I got a little bit of time. Revolving debt, right? You can use it over and over again. Installment loans, you pay it off. It's gone forever. Your school loan is an installment loan. You pay the installments till it's gone. Is that good or bad? It's good if you pay it off. It's bad if you don't. Duh, I understand that. But the most important thing is, how long have you been paying that school loan? I know people that have been paying school loans for 15 years. It's like a mortgage. A mortgage is also an installment loan. But if you've been paying that loan for 10 years and you pay it off, congratulations, you paid off your school loans. Your credit goes down. What? My credit goes down when I pay off my school loan. Why is that? That's because it's an installment loan. And as long as you have the loan open, it gives you history. History is important in credit, right? So if you've been paying it off for 10 years and you clear that debt, yes, it's paid off, but all of that history that you had attached to that open account is now kaput. Gone. That's bad. Is it bad or is it good to pay it off? Well, that's what I tell people to do. I say, look, if we can pay enough on that loan to get it to a very, very small monthly payment, then maybe it'll be a little bit easy to work with, and you can still take advantage of the 10 years of credit history. Because to have a good credit profile, you need at least 5 years of credit history. 5 years, y'all. So if you don't have accounts that are older than 5 years, I know a lot of the listeners here, they have homes, long-standing credit accounts, but a lot of the people who do not, you need at least 5 years of experience in the game, you guys and gals. 5 years in the game. I can give you credit. I can get you set up. Not me in particular, of course. We do credit funding, but I'm talking about the lenders. I'm talking about the banks. They'll look at you like you're wet behind the ears. You're green if you don't have at least 5 years of credit history. So if you got that 10-year school loan, I want you to pay it down to the point where your monthly payments are actually easy to pay. So if it's like $50, $20, under $100, if you can afford it, just go in and say, hey, do I owe you guys $5,000 or whatever? And you have that $5,000 sitting. I want you to take that money that you have, and I want you to try and see if you can take that entire loan and divide it up over the next 3 to 5 years. And whatever that number is, try to make sure it's as low as possible. Give them enough money to make your payments equal out to that low payment. And I want you to just ride it out. Ride out that payment, because you don't know what's going to happen in that 2 to 3 years. You could be trying to get a house. You could be trying to get a car. You can use that credit history from that school loan as leverage. Leverage, y'all. Yes, I know it's annoying. They taking my money. I got to pay them. I get that. But let's flip the script on them. Let's make sure that we benefit from having these loans and that they're not just hurting us as a monthly payment. Because you can do this not only with school loans, you could do it with personal loans too. Here's a trick. It's called a Navy Federal pledge loan. What is that? Some people that are listening to this call and watching this live, you have Navy Federal, I would assume, probably, right? And if you don't, we can get you in there. But if you do, a pledge loan is something that they don't advertise. Why they don't advertise it? Because it's very, very powerful. You have to call them. You have to ask them, say, hey, can I get a pledge loan? Pledge loan is basically you're giving them money and they're giving you a loan in the amount of the money you gave them. At other banks, they have different names for it. It's very similar, actually. But what you're doing is you're doing a secured loan. You can do it at most banks, but what makes Navy Federal so different, Navy Federal will give you the money back that you paid them as you pay them back. Let me repeat that. If you get a pledge loan from Navy Federal for $1,000 and you paid them $800, they would credit your account back $800 as soon as you pay it back. How many secured loans are going to give you your money back as you pay them back? No, they hold your money until you finish paying the loan off. These are tricks of the trade, people. I'm trying to give you the game for free. But what's the benefit of this, right? Not only does it build a relationship with the bank, because in the school loan example, that's something that is just between you and Sally Mae. That's between you and the education department. But you can go to these banks and you can set up these loans for as long as you want. Say you want to take out a 6-month loan. That's enough to build a relationship with Navy Federal or whatever bank you're working with. But say if you want to make it a 3-year loan, you take the 3-year loan and you divide up the payments to where as though you're paying $10, $20 a month on a loan. Think about that. $10 or $20 a month on a loan. You can afford that. That's a Hulu subscription, y'all. Well, it's a very cheap one. I wouldn't say Hulu. Netflix. Because Hulu is outrageous. You can replace your whole TV cable subscription with Hulu. But with Netflix, it's a little bit cheaper. But you do this, so you build a relationship with the lender and you build credit history. Because remember, we need 5 years of credit history, y'all. 5 years. We're building out these credit profiles. We're understanding finance outside of the politics because we need to understand money first and foremost. Thank you, everybody, for joining. But again, this is a Navy Federal pledge loan hack. This is a business or personal bank loan hack, because you can do it in business. You can do it in a personal space as well. You just go in and say, hey, whatever amount of money you can take to the bank, you get a secured loan. And then you ask them, you say, hey, do you reimburse as I pay the loan back, or do you give me all of my money back after I pay off the loan? Most banks are going to say, we refund your money, release your funds. That's the wording that they use at the end of the loan term. We don't want that. You can do that. It helps with your credit history. But if they'll fund you the money back when you pay them, this is where it gets even more saucy. And what I mean by that, if you give Navy Federal $1,000 for your secured pledge loan, and then you turn around and give them 80% of the loan immediately. So say you give them $1,000, they give you $1,000 as a loan. Your money that they're holding is collateral because they don't trust you just yet. You're building credit, or you're building a relationship with the bank. You give them their money back that they gave you. Remember, you gave them $1,000. They gave you $1,000. You give them $800 back. How much do you owe? $200. Now what? $200 divided by the amount of months left in the loan. It's not $1,000 payments on $1,000. It's payments on $200. Now, if you have a 2-year loan and it's $200, y'all do the math on that. It's 24 months divided by 200. Can you afford it? I think so. Come on, y'all. I'm giving you the game for free. You got to understand this is how the banks work. You're building relationship with the bank. Say, hey, if you walk up on one of your friends and say, hey, can I borrow $500? And they've never given you money before, they can look at you like you're crazy. But if you say, friend, can you loan me $500? I'll give you $500 that you can hold until I pay you back the $500 you gave me. I'm like, what do I need to give you the loan for? I'm just want to build a relationship with you to let you know, like, I'll pay you back. This is what you're doing with the banks. Stop looking at them like they're this big corporation and stuff like that. You need to be looking at them like they're a person that you know. Treat them like somebody that you can build a relationship with, y'all. I want you to do that for me. Can you do it? Please and thank you. Treetop Chris, y'all. Wealth management, retirement planning, debt pay down strategies, personal and business credit funding, a network of businesses there to help you in almost any situation. You can give me a call at 1-866-334-8359 when you get a chance. If you want to call in and ask a question, it's 443-380-2867. I'm just giving a shout out to everybody out there so you can know how to reach me. We also have a website, www.treetopfg.com. Get in there. Reach out to me. Reach out to me on social media. Reach out to me via my company. We can have these conversations in depth so we can look at all the tricks of the trade, because this is finance. This is money. We just getting started. This is episode 6 for all the people who are just joining in. We're 6 shows in. The rest of them are going to go online. Episode 3 is online. Episode 1 and 2. You will not get, just letting you know. But let's keep it moving, people. What are we talking about here? We're talking about tricks of the trade. We're talking about finance. I hope everybody got that Navy Federal little tidbit there. That was very important because it works at a lot of different banks. And I love credit unions, y'all, because, you know, Navy Federal is a credit union. We talking about banks. There's something called bank tiers. We got local banks. We got regional banks, credit unions. Credit unions always give you the most money if you treat them like they're somebody instead of treating them like they're the principal's office. You don't want to go in there. You don't want to deal with them. You try to avoid them at all costs until it's time for you to have a conversation. Don't do that. I want you to have a real conversation with these people. Go into the banks and talk to people. How can I take full advantage of my relationship with you all? How can I put myself in a better position to get products? You know, a credit card is a product from a bank. A loan is a product from a bank. They're products, y'all. Just like if you had a bag of chips on a counter, on a shelf at a convenience store, that's a credit card at the bank. Isn't that crazy? Bag of chips is the same thing to the bank because they sell it. They sell these products. They need to sell the products. In order for them to stay in the business, they need to sell credit cards. They need to sell home loans. They need to sell personal loans. They need to get you to pay. So if you go into a mom and pop store and you say, hey, mama, how you doing? That's you having a relationship with the person behind the counter. You don't do that at the bank, though. Why not? Let's change your mind, people. Change your mind. Go in there, build a relationship with these people. Look up this stuff that I'm talking about because it's very important. And I want to help you. I want you to stop running around like chickens with your head cut off. Focus. Be intentional with everything that you do with money. And we'll go from there. Now, I got a statistic for everybody since we're talking about paying stuff. 53% of people pay their credit cards off every month. 47% do not. 53% of people pay their credit cards off. 47% do not. Which side are you on? Are you on the side of paying your cards off 100% every month? I'm not. I'm the finance guy. What are you talking about? You don't pay your stuff up because I know how it works. How does it work? I need to have 1 to 10% utilization on my cards. Unless there's a caveat, but I want you to keep that in mind. 1 to 10% utilization on your cards. Never higher. Someone talked about 30%. Don't listen to them. If you're using 30% of your card, you sneeze, your overutilization, your credit plummets 20 points. Don't ever do that. Listen to me when I tell you, for the people that are watching, you can see me. You see me? 30%? Never. The highest you can ever do, and I'm being lenient, It's 25%. That way, if you make a mistake, you can try to backtrack. But I always say 1 to 10% for the people who want to hold the balance, because we're talking to the 47% of y'all who hold balances on their cards, not the 53% who pay them off every month. But again, think about that. Do you pay your credit cards off every month? If you don't, 1 to 10% is your max. 25% if you're strapped for cash and you're trying to float the debt. What is that, y'all? Float the debt. You ever heard that before? Floating debt? Floating debt is what a lot of people who come to America, they use this strategy. And what is the strategy? Because we're going to get back to the 1 to 10%, but I wanted to touch on this because it's very important. When people come to this country and they get access to capital, even if it's imaginary capital, which is credit, they do a strategy called floating the debt. So basically, if I start a business, I get an SBA loan because I have okay credit. I'm from Zimbabwe. I've come over here. I got an SBA loan. I'm a new citizen not too long ago. I have a blank credit history, but I got a friend that's giving me authorized users. It can get hectic, but I got my loan. My loan is going to cost me $600 a month, whatever that total loan is. Now, if I don't have the $600 in business or income coming in, but I have $25,000 in credit, what these people do is they use their credit to pay their credit bill. It sounds crazy. Why would you do that? Because you be in serious debt. Because you have a business or you have some means of income that you're building. You need money to pay those bills while you build out what you're doing. So floating debt is simply meaning that you have a bill that you have to pay and you have credit available to pay that bill for the time being while you build out your infrastructure to make money. So you start your hot dog business, hot dog truck. Well, no, like you know what I'm talking to. The person I'm talking about, this hot dog truck. Hot dog truck cost me $25,000. It's going to cost me $1,000 in food a month. I'm going to make $2,000 a month. I don't make that $2,000. How am I going to pay my $1,000 a month? I got an extra $30,000 that I got before I even started the business. I always tell people, get your money before you go into business and then go into business. Don't start a business to make money. Get money to start a business. That's why you always come to a funding company like Treetop Financial Group to get your funds before you start your business. But floating debt is something that you cannot do if you don't have the money before you get started. Get the money before you get started, people. And then when it's time to use this utilization strategy that I'm telling you about, it wouldn't even matter really because you're using business credit. When you get business credit from me, you don't have to worry about utilization because all the business credit people want to understand and know is that you can pay back. It doesn't matter if you're floating debt and they don't know you're floating debt. You're paying back until you make enough money to actually afford what you're doing. Now, you can end up like somebody like Trump if you don't do it right. You'd be in debt, filing bankruptcy on all types of LLCs if you don't do it right. That's why you need a wealth manager or financial advisor or money coach. Not me in particular. That's what I do. But, you know, you want to at least put in the work so you can understand how funds work. But floating debt is simply using credit to pay off bills until you have enough money to pay off the credit and the bills monthly. But when we go back to this 1 and 10%, it looks better to the banks that you have some utilization. Some people ask me, how often should I use my credit card? Someone like me, I'll be honest, I'm not exaggerating. I have 25 accounts when it comes to credit. It's 25 accounts, 25 credit accounts. What do you need all them credit accounts for? Because each one of them got a couple thousand on it. I'm not going to put all the information out there. It's imaginary money. People go get it so you can use it. I'm not talking about go get it so you can buy a Phantom or something crazy like that. I'm talking about having the money there so you can use it in emergencies. The roof goes up on your house. You need to repair your car. You don't want to ask Sally or cousin, Tom or whatever you got, family members or anybody for money. You should be able to stand on your own too. And to be able to do that, you have to have the credit to do it. Because it's the same if you were going to one of your family members. Now, it would be slightly different because you hoping that family member is going to give it to you for free and you don't have to pay them back. Some of you going to take it and not pay them back anyway. But the people who are good standing up individuals that want to pay people back, go to the bank, have a conversation with them. Hey, if you're a business owner, where's the business relationship manager? I like to speak with them. How can I get the most credit funding based on my credit profile? Here what I have. Go to the bank. If you're not in business, say, hey, I have my credit is okay, or I need to get it fixed, or my credit is great. Have a conversation with them. What can I do to get enough funds from you guys, or the highest amount of funds? I'll just, again, go back to Navy Federal. They usually give you about 80,000 before they tap you out. 80 grand they have for on the personal side before they get you out of the paint. So just so you know, I mean, each bank has a cap and they want information like W-2. Some banks will give you money without even providing them a W-2. It's called a no-doc loan. Uh-oh. I know some of y'all heard of that no-doc loan before. You're going to look it up. You better. I'm giving you sauce, people. Every Wednesday at 6 p.m. If you hear my voice during the week, the people who are interested in this money, I want you to tune in on these Wednesday evenings. It's about to get dark outside, y'all. We're going into the fall. It's getting cold. I don't know if it's a heat wave this week, but I'm giving you some heat right now. This is flames coming from the financial realm, and you're going to use it to build with your fire instrument. Oh no, we're not gonna get into all this, the spiritual stuff, But anyway. Very, very important. I'm running out of time, as I usually do, because I try to cover too many things at once. But again, back to your utilization. Last thing I'm going to say, 1 to 10%. And also you want to use your cards within 0 and 90 days. How often should you use them? At least once in that 90-day period. Now, the show is going to be uploaded again. I hope everybody enjoyed the information that I am bringing to you all. And we're going to do this again next week on Pocket Watchers. You were just listening to Pocket Watchers, where we talk about nurturing wealth, cultivating the future through financial education.